Welcome back. It's time now to take a look at the top business stories. GCC countries try to overcome obstacles to a customs union. UAE banking industry opposes regulation of banking fees. And US job market turns sunny. Let's look at the equity markets first. The UAE bourses started the first trading day of the week with a plus. Dubai's DFM General Index surged 2.7% to close at 1,389 points. The financial sector gained the most, with Dubai Islamic Bank rising 4%. Dubai Investments gaining 4.9% and Shua Capital rising by 3.8%. Heavyweight EMA Properties rose 2.5% today. Arab Tech Holding gained 3.5%. 173 million shares were traded, valued at 226 million dirhams. And over in the capital, the ADX gained 1.1% to close at 2,558 points, with the industrial sector posting the strongest gains. Index heavyweight Etisalat gained 0.5% to close at 10 dirhams 75. National Bank of Abu Dhabi also gained 0.5% to end the trading day at 11 dirhams 15. First Gulf Bank rose 2.3%. Even more so, Abu Dhabi Commercial Bank, which soared 4.2%. One of the best performers on the ADX was Abu Dhabi National Hotels Company, which gained over 9%. One reason being that hotel occupancy rates in the capital rose by 5% in January. 71 million shares were traded, valued at 105 million dirhams. Like the UAE equity markets, the GCC countries' main benchmarks ended higher today. Egypt's stock exchange, which suspended trading a month ago, said it will remain closed until further notice. And now to our top stories. The Gulf Cooperation Council will this year clear the path to create a customs union among its 6 member countries. Pending issues, though, needed to be resolved to reach a final deal, Abdul Rahman Al Attiyah, the GCC Secretary General, said. The introduction of a GCC customs union was first discussed back in 2003. Ever since, it had been hailed by officials as a major achievement, as it would help integrate the world's biggest oil-exporting economies. But differences have delayed a union, for instance, on how to introduce a permanent system to distribute custom receipts among the 6 members. The member states are so far have not agreed on custom rates. This year, according to officials, a program will be put in place to tackle the problems. Another meeting will be held in April to discuss the same issue. Following a public outcry against rising fees for banking services, the UAE Central Bank now decided to regulate fees to bring about uniformity. The banking industry, on the other hand, would like to see supply and demand continue to set prices. The chief executive of Majrek Bank, for instance, Abdul Aziz Al Ghurair, said the UAE economy was a free economy and that the market forces should be allowed free play in setting the prices of various products and services offered by the banking industry. He added that the UAE government should provide a huge fiscal boost to kickstart the economy. Also, the central bank, together with the government, should ease the liquidity situation in the banking sector to boost lending. The UAE is the world's 3rd largest exporter of dates, according to a study conducted by the Ministry of Foreign Trade. According to the research, the UAE accounts for 33% of the world's exports of dates. Iraq came in second at 22%. Both countries combined export more than half of all dates globally. As for imports, the UAE's imports of dates constituted 31.5% of the global share, second only to India. Also, the study estimates that there are around 40 different kinds of dates being produced in the UAE today. Dubai-based T-Com Investment signs a $350 million deal for a tech park in India. A lease agreement has been signed between T-Com and the state government of Kerala, which gives the green light to Smart City Kochi. The project has been dogged by delays, but the agreement is expected to give new momentum. Smart City Kochi will be one of India's largest business parks. For T-Com, the deal marks a big step in its international expansion strategy. It plans to set up prototypes of Dubai Internet City and Dubai Media City at various locations worldwide. And in our fast financial news, Abu Dhabi's overall volume of foreign trade last year fell by 2.6% to just over 109 billion dirhams. That is due to a drop in imports, the Department of Finance announced, without citing a reason for the decline. Non-oil exports surged by 22% on year to 11.6 billion dirhams, while imports fell 8% to 86.6 billion dirhams. Saudi Aramco, the world's largest oil exporter, raised its official selling prices for all crude grades for customers in Asia and Northwest Europe for April delivery. Customers in the US, though, pay less. Saudi Arabian Oil Minister Ali Al-Naimi at the end of February said his country and other OPEC members would be ready to counter any disruption anywhere in the world by pumping more crude. Kuwaiti telecoms operator Zain swung to a higher-than-expected profit in the fourth quarter. The company, which is currently subject to a $12 billion takeover bid from UAE's Etisalat, posted a net profit of 87 million dinars. A year earlier, it posted a net loss of 0.7 million dinars. Etisalat's bid for Zain came to a halt last week when the company missed a due diligence deadline. Nevertheless, Etisalat said it was still interested in taking over a 46% majority stake. Half of the world's adult population does not have a bank account. That's according to an expert at the Prepaid Summit Middle East, which will be held in Dubai at the end of March. This provides large opportunities for prepaid products, which can help provide the unbanked population with financial services. And after the break, we will run you through what's making the headlines in international business today. See you at the other side of the break.